A couple of housekeeping notes to get to today. The first thing we want to do actually is conduct a live poll. If those of you who are on the app can get it out. This is the question here in front of you. What was your favorite part of yesterday's programming? I am no longer a category in the poll. 12 votes. Come on, let's get more than 12 on the board. These polls are a great way of showing your participation, and the engagement levels have been incredible. I don't know if you're watching the leaderboard, but many of you are engaging, and it's exactly what we hope to see. So it sounds like it looks as though even as more votes come in, it's the rapid-fire keynotes that you're enjoying. I must say, I would second that. I thought both the format and the content have been fantastic in the range and the breadth and just in the pure entertainment value that we're seeing. So it's with delight. Well, let me actually just also point out that some of the live demos that you're going to see at the exhibit hall, we encourage you to check out all of the exhibits across the way. It's right where the food is, so it's really easy to do at lunch. We're also at lunch having live demos from Self-Pay, Dream Payments, and Cause Square. Cause Square you're going to hear more about tomorrow, but definitely check that out. Now it's time for our rapid-fire keynotes, and only 1% on the food. I'm going to have to examine that. I thought the food was delicious. I want to introduce George Evers. He's the Immediate Payment Services Director for VocaLink. He's spent the past 15 years driving innovations in the space. He is in charge of international development of VocaLink's real-time payments and processing and all of the associated payment solutions. He's taken that global. He was pushing out the strategies in the US, Asia Pacific, Europe, the Middle East. Previously, he was the head of channels at RBS. He was in charge of the self-service channel strategy there, their global transaction services. And he also recently, as part of VocaLink's push, has signed a contract with the Clearinghouse. And that means that's a partnership that brings real-time payments to the United States. Please join me in welcoming George.
Is this my clicker? Good morning, everyone. Thank you for having us here today. We're very proud to be attending. So these pictures up above are really two versions of the London sewage system. This is the Victorian sewage system that went in the Victorian times. This is now the modern system that's been implemented. I'm not going to dwell too long on the sewage systems of London, other than to say that they are essential components in keeping a healthy city alive and well, and making sure that you need to understand that these need to be upgraded and keep in step with the time and the needs of that city. So they bring health to the city. In much the same way, we think of payments infrastructure as being an essential component in the health of a vibrant economy. So the ability for the economy, the businesses, and the consumers to move money to each other is essential to the health of that economy. I can tell you kind of a little bit of a story that I think really brought that home to me. There've been two major kind of shocks that I've lived through within the banking system. So I've lived in, I think, interesting times. The first was in 2008, the crash, which was largely related to credit and capability of the banks to fulfill those commitments. And the second one, which was local, and you now know which the bank was, and it was in the public news, was living through a payment systems failure at RBS. Of those two events, the one that really brought home to me the importance of the role of those payment systems and the importance of the role of the bank in the community was that systems crash. Because if people were unable to move their money, unable to complete their transactions, buy their house, move their business forward, pay their staff, it really, really brought home the profound importance of that payment infrastructure to the economy, and that payment infrastructure being modern and fit for purpose. But if we think now about some of the payment infrastructures, I think there's now a global move towards real time. But that's a very, very healthy move, I think, for the banking system and the economies overall. Because if we think back to the existing systems, our batch systems and our batch processes, some of them are decades old. People talk about the systems and the infrastructure being 40 years old. So if you're building a system 40 years ago, what were the constraints technically that were there that just aren't there today? So you're constrained by the amount of time it takes to process that information. You're constrained then by the networks and the ability to pass data across those networks. And all of those constraints got built into the systems and remain there today. But lots of those constraints have gone now. And I think another aspect of those systems is typically when banks were building them or implementing them, they were doing it to really solve a problem between the banks. So how can we make this process of moving the files or the information we need to make sure our customers can move money from one bank to another more efficient for us? They weren't really built with the end customer in mind, with thinking about the end customer as a direct user of that. Hardly surprising, given 40 years ago, internet banking, I don't think it was quite established. Mobile banking and smartphone penetration wasn't as high as it is today. So a lot has changed. A lot has changed, and therefore there is a consequence and a need for those core infrastructures and those payment systems to change and move on to deal with that. One of the other consequences of that was threat from disruption and fintech or organizations who would go in and solve problems that those core infrastructures did not solve for customers. So that might be around data. The neat example, I think, I've been reflecting back on it quite a lot, was the emergence of PayPal. Really, an organization that solved a problem that emerged when individuals wanted to pay each other for goods bought on eBay. And I find it kind of ironic that actually now there's a lot of discussion when people think about early use cases for real-time payments. They think about P2P, and they just think, I'm just not sure there's a business case there. And I thought, well, PayPal really wasn't that, didn't they solve a P2P problem? And can we argue that there was no business case of PayPal, who now provide financial services, are one of the dominant payment providers in a number of territories around the world? So some of the issues with that traditional infrastructure, there's a high cost of change. It takes a long time to make change. Limited amount of data available. Clearing and settlement time is too long, so therefore that creates an overhead for participants in terms of time taken to move the money. It creates an overhead for financial institutions in terms of managing the time between someone creating and making a payment and that being received by a recipient. Within that, when I looked at, kind of at RBS, when we looked at where our costs were, most of the things were within payment queries when you really dug into it were not, this payment is wrong or this is incorrect, because usually that was right. It's, I've sent a payment. Have you got it? I've sent a payment. When will it get there? I'm expecting a payment. When will it arrive? I've got a payment. There's no information with it. So there's a high degree of friction and change in that. It's not a trivial thing to make a change to that core infrastructure. And I think it feels like a bold step and a challenge to move. But what our experience in the UK, now we've been running real-time payments, the faster payment system for 9 years, is that the change is worthwhile. Making that step and moving to a modern real-time payments infrastructure makes sense and delivers value across the client group, as long as you do it with that in mind. So what I would kind of argue is really the time to modernize really is now. I don't think it should be seen as a defensive measure. It should be seen as an active and positive move by the banking industry. Putting in a modern real-time payments infrastructure, leveraging the standards that are now becoming more mature, such as ISO 20022, to deliver rich data sets alongside those payment messages, is a huge opportunity for financial services organization. It's also a huge opportunity for the financial services organizations to deliver an infrastructure into a really vibrant ecosystem at the moment. So in terms of the fintechs and opening access to that infrastructure to allow innovation to happen in the marketplace, to allow value to be delivered to customers, is really important as well. Some of the learnings we have, over the past 3 years, so when we moved from being really primarily the operator of that infrastructure to an exporter of that know-how through the new platform that we put first live in Singapore, now working on the program in the clearinghouse in the US and also in other parts of Asia as well, is actually the more that you design into that system, the more value you put into that system, and the more thought you put into the end customer and end users of that system, the richer and stronger it will be. So don't constrain thinking to just moving the money. Think about what the message set can do. So functions such as request to pay revolutionizes the way that corporates and businesses ask to be paid for goods and items. So the ability for a corporate to send a message through that central infrastructure and to reach any of the bank accounts associated with it. So let's not forget the power of ubiquity that the banks have and the ubiquitous availability of accounts, current accounts, which in essence are really the fuel tank to drive a payments engine, is very powerful. So the ability for me as a utility company, as a small merchant, to send a request for payment to the end user. And that end user as a consumer to be in control of when they pay that, to be clear about what they're paying, and be able to send that payment back in real time. Very powerful. But also think back to some of the points I made around the challenge for banks in the administration and the overhead of running payments infrastructure. Think about other message types like request for refund. If you can manage that through the same system, then the overhead that we currently have in banks of a payment's been sent by mistake, you pick up the phone, you talk to the other bank, they talk to their customer, there's a huge overhead. Design into the system some efficiencies there around administration. Allow the data to be connected with the payment as delivering huge value to corporates. Reconciliation is a major challenge. If you think about the complexity for businesses in terms of managing their payment systems, their accounting platforms, their invoicing platforms, e-invoice platforms are not connected. You have a very fragmented and fractured landscape for customers that they have to interact with because a lot of the data associated with the payment just doesn't remain connected to it effectively. So with these new systems, you should think about connecting the data directly to the payments. In terms of kind of comfort around the take-up and adoption of real-time payments, so faster payments now is 9 years old in the UK. It's still the fastest growing payment tool for the business, for the community overall. It's still growing at 17% a year, even 9 years on. 40% of the flows are non-personal, so they're corporate, so businesses have adopted and used the technology very effectively. And what I would say, I'm actually become quite jealous and envious of the people looking at implementing our new system. Is there's so much more that's been done with those payment systems now than just moving the credit transfer. There's so much more that's been thought and designed into those systems as well. So for me, the message is kind of seize the opportunity and take the leap. I promise you it's worth it. When we think about what that infrastructure is going to look like and we think about the benefits as they flow out to all users, all cases. I've talked about examples of improving life for corporates, but the benefits to those businesses are I no longer need to use the check. I can move away from distributing cash. My working capital management is more effective. My payment operations can become more efficient as I have richer data available to me associated with all the payments that I'm processing. In terms of the benefits to the banks, so it really does enhance the customer experience. In the UK, the normal expectation is that money can just move in real time. So for me as a consumer, a transaction that before was, quite kind of a nerve-wracking one. I am going to buy a new car. I'm going to spend a few £1,000s on that car. What were my options previously? They were to get the cash, go and meet someone to buy a car with cash, to get a banker's draft. That takes time and effort. I had to go into the branch to do it. With faster payments, I can go there, I can meet, I can dial up my mobile phone, I can send the money at the meeting. The person with the car can check their balance, it's gone in, it's updated in real time. We're all fine, we can move on with the transaction. So that's a radical change for consumers. The operations estate simplification is another key one for us. So when we implemented faster payments underneath my e-banking channel at RBS, we consolidated onto just this common platform for all payments. It didn't constrain us from offering different payment value propositions to our customers. So an immediate payment, you wanted to go tomorrow, you wanted to go the next day, you wanted to go in 3 weeks, you can still do that. But we had one platform to deliver that through. And then re-intermediation. So you move yourself back up the value chain. You no longer have a set of people solving problems that to do with there being a time gap between payment being sent, there not being enough information as well. Benefits to a consumer is, the real-time experience for consumers in the UK is just expected. Paying bills, moving money, getting money to a loved one is all expected and highly valued. It's an essential component for internet and mobile banking. It can be the underpinning infrastructure for managing bill payment, daily and weekly wages. So again, a question for corporates or for individuals working on a daily or weekly basis had previously been, who will take the risk? Will I as the business take the risk that I'm going to commit to pay someone in a day or two's time or 3 days' time, not knowing if they're going to come for those final 2 days? and then have to recover that money, or will I, as the individual who needs to be paid weekly or needs to be paid on that day, have to wait 3 days, 4 days before I get the money after I've done the work so I can go and buy the food I need to? And then other examples that we're seeing very strong adoption within government and insurance companies is getting money to people in an emergency, being able to move that money in real time. A lot of local authorities in the UK had highly paid civil servants who are social workers, whose job was really to interact with the people in the community, having to drive around with cash and get that delivered to individuals in emergency cases. They need to move away from that and the ability to move that in real time. So how are we exporting UK and immediate payments, the UK immediate payments know-how? Fast was our first implementation in Singapore, and it's probably operating today one of the most advanced payment systems in the world. They have real-time credit and debit transfers, and now they're starting to build out some overlay services on top of that as a community. In the US, we are partway through the project to deliver that real-time payments infrastructure for the clearinghouse. That will be more functionally rich than even the Singapore one, because they've focused on those value-add messages in terms of request to pay, administrative messages, refund, etc. A really well thought through opportunity. And what we're seeing is actually each territory that implements real-time payments gets to the value faster because they're learning from what's being implemented in other areas. We're building on common standards such as ISO 20022, the message set. And ahead of us, we have a number of markets that are now making the leap forwards towards real-time payments. So Canada, a kind of well-established program, really driving forward the thinking on that. We see activity in the Middle East, lots of activity in Asia Pacific as well, and also the speed with which organizations are getting to innovative solutions or solutions that can be built and overlay on top of that infrastructure is faster than it's ever been. So I would say, in conclusion, don't worry about it. It will be okay. It's probably the most important modernization program, I think, for financial services for a century, but it will drive huge benefits to the consumers, the businesses that we all support in our own organizations. Thank you.
Thanks, George. Thanks so much, George. What a great case for modernization with real-world examples of how lives and businesses can be changed.